Buried in your benefits portal, there are two buttons. Roth. Traditional. You clicked one. Probably on your first day. Probably in under a minute. Somewhere between the parking form and the fire safety video. That click is worth about $100,000 in one direction or the other. The Matrix handed you 2 pills and a whole speech about destiny. HR handed you a drop-down menu. So how did you choose? Be honest. Vibes? A coin flip? Whatever a coworker said in the break room? And when you went looking for help, every finance video on the planet ended with the same brave, chin-stroking answer. Well, it depends. Depends on what? Silence. Roll credits. You clicked a 6-figure button, and the entire advice industry shrugged. Okay, breathe. This one ends differently. Today, the numbers run live for 3 people. A climber at the start, a peak earner in the middle, a late starter playing catch-up. One of them is you, and everyone walks out with a verdict. By the end, you'll know your side of the fork. And the one question that settles it, a question about you, not about Congress. First, Roth versus traditional 401k in 30 seconds. Same account, same paycheck money, the same boring index funds we planted on the mountain. One difference, where the IRS parks its toll booth. Traditional, you skip the toll at the bottom. Money goes in untaxed, grows untaxed, and the collector waits at the summit for every dollar you pull out. Patient, very patient. He knows you're coming. Roth, you pay the toll at the gate, then nothing. Ever again. The collector loses your address. Tax-free growth, tax-free summit. Pay now or pay later. Your gut says Roth, because tax-free sounds like winning. Careful. Vegas built an entire city out of things that sound like winning. Here comes the fact that breaks your gut. If your tax rate is the same at the gate and the summit, the 2 roads pay out identical amounts. Not similar, identical. Watch. $6,000 of paycheck a year, 30 years, 8% growth, 22% tax on both ends. Roth invests what survives, the toll. Traditional invests it all and pays later. Traditional road, $530,165.43. Roth road, $530,165.43 to the penny. Somewhere a Grail Knight is furious. All that choose wisely drama, and the 2 cups pour out identical. The fork does nothing on its own. Nothing. The whole $100,000 game is whether your toll rate changes between the gate and the summit. So the account was never the decision. Your earning life is. Let's run yours. Same rules for everyone. Same paycheck dollars either way. 8% growth. Today's brackets. Dr. Strange scanned 14 million futures to find the one that works. We only need 3. The math picks the winner. Not me. Not vibes. Person 1. The climber. 25 years old. $48,000 a year. The 12% bracket. $6,000 a year for 40 years. That money grows into $1,554,339.11. Now toll it. Traditional, taxed at 22% at the summit, $1,212,000. Roth, tolled at 12 at the gate, $1,367,000. Roth wins by $155,433.81. Because a 12% toll is the cheapest gate she will ever stand in front of. That's the clearance rack of tax rates. When the toll is on sale, you pay it. Person 2, the peak earner, 40 years old, $130,000 a year, 24% bracket, $12,000 a year for 25 years. The pile, $877,271.28. Roth Road, $666,000. Traditional road with a summit toll near 12%, $771,000. Traditional wins by $105,272.55. $1,000 decision. decision from the title. And the portal never even blinked when he clicked it. And I hear you. How could I know his toll drops to 12%? Hold that question. It detonates in 90 seconds. Person 3, the late starter, 47. 72,000 a year, 22% bracket, starting from almost nothing. 6,000 a year for 18 years. The pile, $224,701.46. Here's where panic gives bad advice. Panic says Roth. Lock it in, no surprises. Notice how panic always talks like a salesman. All certainty, no math. The math says traditional by $26,964.08. A modest pile means modest withdrawals. Near $9,000 a year, taxed near 10%. He's at his lifetime peak right now. For his money, retirement is the valley. 3 people, 3 verdicts, 0 vibes. If you want your verdict, I built a free calculator that runs this exact simulation on your numbers in 30 seconds. No sign up, nothing to buy, and no guy in a vest calls you afterward. Links in the description. Now the objection screaming in your head since person 2. Nobody can know their future tax bracket. A guess anyway. Here's the twist. You never needed to know it. Everyone stands at this fork asking the wrong question. Will tax rates go up? That's a question about Congress. Unanswerable. Vegas won't even post odds on those people. Ask 10 economists. Get 11 answers. The question that settles the fork is about your own arc. Compared to the rest of your earning life, is this year a peak or a valley? And here's why that works. The part nobody explained. Traditional savings skip the toll at the top of your paycheck. Your highest bracket. 24 cents saved on every dollar. And retirement withdrawals fill the buckets from the bottom. The first slice comes out at 0, covered by the standard deduction, then 10%, then 12. Your retirement dollars stand in the cheap line first, saved at the top, taxed from the bottom. That tilt was printed in the bracket table your whole working life. Nobody pointed at it. The game was never predicting tax rates. It was knowing your position on the arc. Quick pause. If that penny tie just rewired how you see your own checkbox, that's the tap. 2 seconds, right now. It's how this reaches the next person hovering over those 2 buttons, coin in hand, getting shrugged at by the whole internet. Not for me, for them. Okay, real talk now, because this part is yours to keep. So here's the rule. It fits on an index card. Valley, year, Roth. Early career, grad school, a thin season. Your toll is on sale. Pay it now. Peak year, traditional. Earning more than you ever have. Skip the expensive gate. The math says your summit toll runs cheaper. Truly can't tell? Down the middle. Half Roth, half traditional. Your worst case is being half wrong. 3 lines of fine print. They protect your verdict. 1. The match from last video. At most plans, employer money lands on the traditional side no matter what you tick. Nothing to fix. Your checkbox steers your dollars. 2. The box is not welded shut. New job, big raise, income dip, your arc moved, so move the box. Any payday. 3. This is education, not advice. State taxes, other income, and plan rules can shift these lines. For your exact life, a tax pro beats any YouTube video, including this one. One question in the comments. Which shape are you? Type climber, peak, or late start. And if you picked your box by vibes, confess it. Type vibes. Every confession down there gives the next reader permission to go check theirs. I read every single one, the confessions and the corrections both. That's genuinely how the next primer gets built. Step back, look at the whole mountain now. 2 videos ago, time, the engine. Last video, the match, the multiplier. Today, the toll booths. You don't predict the weather on this mountain. You read where you're standing. Peak, pay later, valley, pay now. That's the entire $100,000 decision. on one index card. If someone you love is in their peak earning years and paying the Roth toll because a coworker said Roth is always better, send them this. That break room sentence may be costing them 6 figures. And subscribe. The ladder keeps climbing, one primer at a time. Here's the truth you walk out with. You click that button by vibes because nobody handed you the question. Not because you're bad with money. Nobody handed you the question. Tonight, you have it. Peak or valley. So log in, look at the box, and make the 6-figure click on purpose this time. And before you optimize taxes, claim the free money underneath them. The employer match beats every strategy you heard today, and 1 in 4 people walk past it. That's the last video. It's on your screen right now.